recommend getting your heart trouble to anyone. Mhm. Well, hello traders. Hello, hello. Let's see if we are live. Yes, we are live. I will just. Mhm. Well, the show is going to start in about 5 minutes, so I am going to be um let's see. I'm gonna post a message here right now. Yes, David, it's good to be back. It's good to be back here. So let's just wait 5 minutes because I am, in fact, inviting everybody to the show. And I always like to have uh, the first 5 to 10 minutes on a wait time so everybody can watch the show from the beginning. So I'm sending an email to all daily edgers. That's right. The email was just sent, and I have to post this on SM, social media. All right. Ciao, Jetmir. How are you? Nice to be here. Nice to be here. So, I was away on a trading retreat, which was great, guys, and that's the main reason that I wasn't available because, it had a very structured and very thick schedule, and I was really into it. So that's the main reason that I was not around, but I'm back now. So if everybody is um, if everybody is ready, we're going to start in about 5 minutes, no 3 minutes. Let's give everybody just a little bit of time so they can join us. And remember that any questions that you want to ask me, you can write in the chat. I will be looking at. I have the chat in my other screen, and I'm always looking at that. Uh, so. So you can actually be in communication with me at any time on my show. A little bit of developments, right, on the um, on the U.S. dollar. So we're going to start by looking at the news as we always do. Today we had some good economic data out of the Eurozone, the industrial production year over year. Right here, you can see it on the top left of my screen. The actual number came out minus 1.7% versus minus 2.8%, and an estimate of minus 2.3%. So that's a beat on previous numbers and analyst estimates. And the industrial production month over month rose to declined. I'm sorry, to 0.1% versus 0.4%, and an estimate of minus 0.2%. But the most crucial piece of data here is the year-over-year Eurozone industrial production, which seems to be rising and rising. So that's good for the euro, right? We had the UK core CPI, Consumer Price Index. That is a big piece of data out of well, this is inflation data, right? And I mean, this is crucial for determining the strength or the weakness of a currency. So we had that out of the UK, which remained flat at 1.7%. The house price index year over year flat also from previous numbers. Um, and pretty retail price index, well, pretty flat numbers out of the UK, and that's about it. I have not been following too much this crazy, um, well, this crazy mm, Brexit news. Been away for a little bit, but I mean, we are going to be back. But the thing is that I mean, if you look at the British pound pairs, they're just trading inside of a horrible range. For example, if you look at this, the pound versus the yen is trading in a 100 pip range, which can be traded, guys. But I mean, remember that my style of trading is completely different. And what I look at is actually direction. Um, yeah, what I look at is direction and uh, well, strength and weakness, overall strength and weakness of the currencies. We're going to start right away looking at the US dollar, but if you give me just a second, I need to make sure that we are live in all of our social media platforms. Yeah, we are actually, let me see. Yep, we are live on Facebook and we have to be live on Twitter too. Okay, so again, if you have any questions, just type it on the chat and let's start with the euro. I'm sorry, the DXY. Okay, so basically, the last play we did on the U.S. dollar was going long the U.S. dollar from the lows of the bullish structure of the bearish structure. I think I'm going to change the color um, of my brush since I did change the color of my candlesticks. I do prefer this color, this candlestick color, and we are going to be using a blue. So remember that we went short on the Euro USD at the bottom of the structure to play this pullback, and this was non-farm payrolls Friday, and the rate cut by the Fed that's pushed price down on the US dollar. But if you notice, I have my key level around the 1920. Well, the main reason that I have it at the 1920 is this uh, very, very strong level of support here. Buyers have been found over and over and over, pushing price up. And we this is exactly where we played our short on the Euro USD, which was actually a play on on a long US dollar pullback. And right here, after this massive bearish strength, we again found buyers. So we actually, what we did, if you remember correctly, we wanted to play this bottom on the US dollar. All right, we wanted to play along on the US dollar. So what do we did? I'm sorry, what did we do? Well, what we did was we shorted gold to play a long or to play a bull push on the US dollar. All right. And the thing is that we had a couple of different targets in gold, and I'm going to go ahead and um, well guide you through my thought process on why did we take we take profits at the levels we did, etc. But what I wanted to do is position myself in a short goal for a possible bull breakout on the US dollar. Okay, this is purely technical, guys, but the thing that I did, the position that I wanted to take was a long position on the US dollar by shorting gold, and we are still short gold a little bit. This morning we actually had a sell stop on gold, but but the price in gold reversed. Let me put on the 1 hour chart. And this is the main reason we use sell stops and buy stops, guys. The price in gold. Let me pull out the gold chart. Actually, I will show you what I meant. All right. So this is the 4 hour chart in gold, and we did. Let me go back to the hourly chart. I will show you what we had here. We had a retest of these previous lows, guys, and we had somewhat a rejection here. So instead of going short at market and putting my stops up above the previous high, I had a sell stop here below these lows. Why? Because this is the structure that I was trading, and I needed the structure in my initial key level to break before I wanted to be in the market with my stops all the way up here. But we actually didn't get triggered, and pricing gold just broke to the upside. We are still short from these levels, and our stops are above this high, which is fine, because if we break with this high, I want to be out of my short in gold, because that would mean that we are making a higher high. All right, so this is the situation in gold, but let's go back to the DXY chart, and as you can see, the DXY, or the US dollar currency index, is right now, it's somewhat tapped tapped at the upside by the 98.40 level. All right, big rejection here, a big rejection here. So in any case, we are actually not going to be looking to add to our shorts in gold just yet, but if we test some key levels that I will show you in just a second, we might add to our position. But in the meantime, we are very bullish in this in the dollar. All right, and because of this breakout that I just showed you, of this very important bearish structure, now I do think that we might pull back to this level before we make another high. So I'm looking for a pullback on the US dollar to the 90 to 98 level, which would mean that if we go back to the 4-hour chart, it would mean that after this breakout, I'm going to do the highs and the lows of the move. So we have this low, then this high, then this low, then this high, then this low, and then this high. So I'm looking for a price to make a higher low before a continuation. That is why I'm looking at this 98.40 for as the level to as the new higher high before making a higher low. And I'm looking for a pullback to this crucial level at around the 97.90 to 98, like I told you guys before. So that is the my trade, or my idea on the not my idea, but my analysis on the US dollar. So right now what we're going to be doing is we're going to be looking at the euro versus the US dollar. Shall we? Before we look at the euro versus the US dollar, if you guys have any questions whatsoever, please just ask me through the chat. I am here. I am here for that. And if you are not a premium member, I'm leaving you a link below this video for you to be able to join us for only $25 for the first month. It's a bargain, and you're going to get a lot of information with it, or a lot of, I'm sorry, added value with it. So, moving forward, let's have a look at gold. All right. So gold has been in a very bearish move from the highs of around 1512. Okay, so this was our trade rationale in gold. All right, we had a big rejection of this level, crucial level if you ask me, and it was obvious that a short opportunity in gold was in play, and well, we took that short opportunity at the break of this structure. Okay, great opportunity in gold. We actually took profits right here at this key level for the first as the first take profit level, and we are targeting this one right here, the 135. Now, this is the run that we have been in gold, right? And the reason that we are targeting the 135 is we are actually bullish long term in gold, but if we look at the daily chart, I'm going to show you why. We are actually pretty much bullish gold in the long run, and if you notice correctly, I mean, we have been in a very strong up move. All right, so the reason that I'm targeting that 1435 to 1440 level is because of this. Now, here is where we had that incredible continuation pattern. If you notice correctly, well, we started this a bullish move from the around the 11,000, the 1200 level, and we made a lower low. Then we made a higher high, and I'm looking at this level to be the next lower low before a real push to the upside. Now, the reason that I'm looking at this level as to be the real pullback level is because I'm sorry, is because we are actually trading inside of a bullish flag, if you ask me. Now, just take a look at this bullish flag that we are trading, and I'm actually going to draw it with some actual trend lines. All right, much better looking than that, because I do want to make parallel lines in here. So if you notice correctly, this is actually a very nice bull flag that we are trading in, and the buy zone on this bull flag will be right here, guys. All right, which will be the previous base before a break above. All right, and in nice continuation pattern. So we are going to keep the last bit of our gold shorts. Let's go back to the 4-hour chart. We are going to keep the last bit of our shorts in gold with our targets at the 135 level. I do have an alert here, and we are going to try. Well, no, we are not going to try. We are definitely going to be buyers at this zone right here. Now, this 161 level has absolutely no meaning whatsoever. I was just the targets of this morning's buy trade that was that was sent to premium subscribers, but because we deleted that order because we didn't get filled, I'm going to erase it. And well, this is my view in gold. I'm still short-term bearish right here, with a very bullish bias when we hit that key level. And I will be sending that trade to my subscribers, so don't forget to subscribe to our premium services. The link is down on our the link is down below this video, and you can actually get a subscription for only $25 if you use the code I don't remember the actual code, but the code is there. I think it's set 50 or something like that. Okay, so moving on. That's my view in gold. I think it's very straightforward, guys, and I do hope that you guys join us on premium, because we are actually crushing it. So let's go and have a look at the pound. Okay, now because this is the first daily edge since I was away, I am going to make it only on on the majors and well, maybe if you guys want me to look at something else, I will. But I want to restart this flow of daily shows with with a nice show majors, and then moving forward to what I look at on the other currency pairs. So the pound versus the US dollar again is very much likely to stay inside of this horrible range again. So the thing is that well, when we hit this high, are at the 130 level, big level, the 130 level. If you look closely in historic price action, was a huge level, a very big level, and also round numbers. So basically, we hit it, then we went back below and tested the 127.70 to 128, and we've been trading inside of this range again on the pound versus the US dollar. But the thing is that the pound versus the US is really untradeable to me right now because it is very susceptible to Brexit news. And we hadn't had anything going on from Brexit um, since since we got this big push up. I'm going to stay away from pound pairs for the time being unless we do get some directionality in the political environment in the UK. But for the time being, I mean, there fundamentally speaking, there is nothing that is going to trigger my my view on the pound. All right. I mean, this range could be playable on a technical basis because it's a 200 pip range. But I mean, if you look at the moves, they're pretty choppy, and they do take a lot of time. It's a very slow moving market for the time being, and I am not going to be playing this at all. Now, maybe if we get back to the 127.70 to 128, and at the time that we get here, we get some actual good news on Brexit. I will be a buyer on the pound versus the US dollar, but that seems to be kind of a long shot right now. So what we're going to be doing is we are going to be spectators of this currency pair, well, of the pound pairs, until we get some true directionality. And the thing is that, guys, well, I might go for a range play if we do get back to the 127.70. I will definitely never be playing this range from the top to the bottom. That's a no for me, a no-go. But definitely from the lows to the high, if we manage to get here and I do get some kind of rejection around these levels. But again, I'm not pretty sure. So we're going to go back again at the pound versus the yen. The pound versus the yen is even worse trading inside of a horrible range, very choppy right now. There's nothing much to say right here. I'm sorry about that, guys. There's nothing to say much here, but that the range is getting tighter and tighter and topping around the 140.50 level. Not going to be playing this currency pair, but we do have some very exciting levels on the Euro USD. Now the Euro versus the US dollar. Now this is just technical levels, nothing more, nothing else. If you notice, we are right here hitting the 110 level. Yes, the 110 level, which was a previous key level, because when we broke with this, just take a look at this. when after hitting the 108.50, is that it? Yeah, 108.50 around these lows, well, buyers were found and they moved price up to the 109.90 level. That was rejected quite a few times. Then buyers managed to break above and retest this broken level before pushing price all the way up to the 1180. Now, so this is a big level that we are looking at, the 110 level in the euro versus the US dollar. This is just technical levels, of course, guys. And we are trading inside what seems to be a um, lowering triangle that could break to the upside. But the thing is that um, we have also hit a some short-term targets from sellers that sold the euro versus the US dollar at these levels, which is the 161.8% retrace. I'm sorry, the 161.8% retracement right here. So everything points out at a possible bullish continuation on the euro versus the US dollar. And not only that, but we also remember that we were talking about the possibility of the DXY or the US dollar to pull back to the 98 to the 97.90 level. All right, this pullback on the DXY would definitely trigger our longs on the euro US dollar. But again, these are just levels on this currency pair, and they are they are very much short-term levels that we are playing with. But the thing, guys, is that if you remember correctly, we did break with this very long-term bullish, or I'm sorry, bearish structure in this currency pair. All right. So we were we were looking at a very bearish market on the euro versus the US dollar right here. If you follow me, all right, I'm going to only point out the highs and the lows. First high, first lower low, first lower high, first lower low. I'm sorry, second lower low, second lower high, second lower low, but by pips, and then we broke to the upside. All right. Now, what I'm looking at is the first higher low. Remember that this is the last lower low of the entire move to the downside. And if you look here, this might be the first higher low. And I'm looking at this level to be the first higher low for a bullish continuation. So everything points out at a possible bullish reversal on the euro versus the US dollar. Remember that we have gone for around 166 pips to the downside with an entire move to the upside of around 290. So that would be around the 61.8 if I'm not mistaken. And if you like fibs, right? I do use fibs on my trading, but only the 161.8. But if you are into fibs, we are going to be using the 61.8, which is the case. That is exactly the 61.8 level. So there you go. And another another justification for a possible long trade, and the risk versus the reward is very nice. Again, I mean, if you want this delivered to you every single day, just join the my premium group. The link is below, and it is only $25 for the first month and only $50 afterwards. I mean, it's a steal. You get premium premium analysis, all my trade ideas, my trade management, etc. I mean, I urge you to take a look at it, and yeah, I mean, we have some question. What about oil? Yeah, I'm gonna have a look at oil and signals. I mean, trading signals are only for premium members, guys. I think that I do give you a lot of added value here on my daily shows that are free for everybody. But if you want my actual trade levels, you have to join my premium services. And again, it's only $50. I'm pretty sure you're gonna make that back with my signal. So yeah, I can't give you signals on my on my free shows. I'm sorry. And of course, there are compliance issues. So no, there will not be signals here. If you want my trade levels and ideas, you have to join my premium services, Jetmir. But I'm going to go on oil. I'm going to look at my oil chart in just a second for you. That is not an issue. Hey, Pure Mathematics, how are you? Nice to see you back here, man. So let's have a look at the US dollar, Canadian dollar key levels working just fine. I mean, well, not working just fine, but actually being um, respected. So what are we looking at the US dollar, Canadian dollar? I mean, there is absolutely nothing that we can do about the USD CAD, but look for a retest of the 132, what is it, 133.20 level. Yeah, a retest of the 133 level maybe for a continuation down. But I mean, I haven't looked at the economic data um, on on Canada. I'm sorry, um, but I will, and I will get something to you. For the time being, I mean, this chart doesn't. I mean, is absolutely untradeable to me. I will not be looking at the USD CAD for a trade opportunity. But if you look at it, no, actually, no. I mean, there's nothing for me there. The US dollar, Japanese yen, the USD JAP. Well, there's a big resistance at around these highs, around the 109.30 to 109.40. The reason, I mean, why don't we do something? Why don't we just go through this chart together and draw some key levels, all right? Let's see where we are. So this is the first key level that I'm looking at. Big important lows, then a breakdown and a retest of that level, and a retest again. This is why I wanted to short the US dollar, Japanese yen. And actually, I am going to be looking to short it after this show with my premium members. But I'm going to draw the levels with you guys. Okay, so the first thing that I'm noticing is that we are in fact looking at a pullback to a previous key level. Now you have to remember that key levels are not in fact straight lines, but they are zones. So if you draw the upper side of the zone around here, which it is not, should be around these highs. Well, you have a resistance area between the 109, 109.10, well, between the 109 to the 109.50 level. This is our resistance zone, and we are actually moving inside of a very structured a bullish pennant, which by the way seems to be seems to be respected. um, um, well, seems to be respected. And if we look closely, now, if you look closely, what we have here was kind of a pattern within a pattern. If you look closely here, a pattern within a pattern, which broke to the downside. But the thing is that this would actually be a long-term position on the USD JAP. Remember, I'm sorry. We do have something about pure mathematics. He says that U.S. dollar is going down because gold is going up. Now, first of all, it's the other way around, and you have to remember that. Um, uh, well, that what's the actual quote that I'm looking at? Uh, well, I'm going to go back, but I mean that the U.S. dollar and correlation does not mean causation. So you cannot, you cannot have a trade idea just based on correlation. So the thing is that I am basically a bull in gold due to seasonality and well, if you look at seasonality, that's the main reason I am a short-term bear on gold. But um, again, if you look at seasonality, because of January, February, I am a long-term bull, and also because money has been flowing from equities and cash to gold. That means that gold is going to keep going higher and higher. So you have a target in the U.S. dollar Canadian dollar that is 132.56. Let's have a look at the U.S. dollar Canadian dollar 132.56. 132.56. 132.56. I don't understand your target on the US dollar Canadian dollar. I mean, it's around this candle. I really do not understand your target. You have to give me a little bit more of background history on your idea. But I mean, yeah, thank you for sharing. So the US dollar Japanese yen it's looking very toppy at these previous levels, like I was saying. But the thing is that to me there is absolutely no trade whatsoever around this zone. I mean, there is no setup. I do have the idea of going short on the U.S. dollar Japanese yen at a possibly at a later time, but there is no setup at the moment. And if you ask me, this is pretty flaggy for a bullish continuation. So the reason that I do have the trade idea or the idea to go short on the U.S. dollar Japanese yen, but I'm not going to go short just yet, is because um, there is no setup to me. The other thing is that the current lows are testing these previous highs. So going short at a retest of a support is just a crazy idea. What levels I will be looking to for a break to go short are these lows. But again, that would mean that my stop loss would be quite high. And my first target, I don't know if it would give me a 1 to 2. Let's have a look if that would give me a 1 to 2 risk to reward ratio. So 88 pips on a stop loss for a 190 pips on a um, on the target number one. So yeah, I would definitely be taking that trade, but the setup needs to be developed. Okay, the setup needs to develop in order for me to take that short and a possible break of this pennant that the US dollar Japanese yen is trading at. And I will be managing this very aggressively, in the sense that because we are still trading inside of a pennant, I don't know if it's going to hold or if it's going to break. So I will be managing my stops very tight, etc. And if you want that trade, subscribe to my premium. Subscribe to my premium group. The link is below this video, and of course that you get a voucher or a code to use to get 50% off your first month, and then it's just $50 afterwards on a monthly basis. That's nothing. You're gonna get that back with the value that you're going to get out of me. So basically, this is the US dollar Japanese yen. Let's have a look at another currency pair. US dollars versus the Swiss franc. Again, I shorted the US dollar versus the Swiss franc last week, I think, or a couple of weeks back at around this level. But I mean, it failed to break with these lows, and I decided to give up on that idea because I am not a short-term trader. I do trade a longer. I do trade uh, on the longer uh, times. If you get what I'm going through, I aim at very very long moves, very big moves, and a crazy pullback or a little pullback just doesn't interest me at all whatsoever. So basically, we are going to stay flat on the US dollar versus the Swiss franc, and I don't think I'm going to be touching this currency pair for a while. Only if we break actually with parity for a bullish continuation, because it really doesn't seem to be doing much at the time. And I mean, we are trading in a very tight, well, it's not that tight, it's 160 pip range, but there is no setup for me. Okay, I follow my rules, and that's why I'm profitable in the long term. So let's have a look at crude oil, Jetmir. I don't know your thoughts on crude oil. I took this is one of the trades that I took last week on crude oil. I went long right here with this risk, and I'm sorry, and my targets were at the highs of the structure. Again, a big winner on crude, and where there's nothing much to say in crude oil. Again, I hate this choppy range. There is nothing tradable in my eyes, and there's so many more good opportunities out there that I really wouldn't be touching crude oil. Now the only level that I will be looking at is it's actually a pullback to the 54.80 level, maybe for a buy. But I mean, I really don't like anything about this chart, and I haven't looked at at any no, yeah, this is a 4-hour chart. I haven't looked at any fundamentals on this market, but the thing is that well, I'm going. We are trading inside of a bullish structure right here that seems to be somewhat holding, if you ask me. So if you draw the highs and the lows of this structure, until right here at my trade, we were actually respecting it, and we had very good were in clean moves. So uh, and then we went all the way to these highs, good trade in crude. Now we are just chopping here. So I really don't think that this structure is working anymore. And I mean, I would like to be a buyer of crude oil, but only if we manage to move below to the 54.80 level and higher. So yes, it's the 1 hour chart from the UTC 00. I have no idea. Um, I mean, but just look at why you not did a short. I don't understand. I don't understand that. So let's move on. This is crude oil. I mean, yeah, this is crude oil, and absolutely nothing to do here. I'm not sure what you meant or what you mean. Why you not did a pie short on your end chart? I don't know. I don't know what you mean. I'm sorry, but let's move on. This was crude oil. Now, the other trade that I took a while back, a couple of weeks. I don't know if it was last week. Was this buy on the um, on the Australian dollar versus the US dollar at these lows, at the break of this flag. Very clean setup, if you ask me. right? And we hit both of our targets. The first target at the top of the structure, and the second target at 161.8 with a previous key level. Very very good, very clean buy on the Australian dollar versus the US dollar. If you ask me, yeah, pretty easy. And right now, I'm looking at these lows to be retested for a possible buy again. But I'm not so. I'm not so keen of a retracement back to these levels. So for the time being, I am going to remain flat on this currency pair. And actually, yesterday we had a big push on the New Zealand dollar, US dollar. This trade I did miss, and because I just got back, and I had to do catch up on my charts, and by the time I did the catch up on the New Zealand dollar, US dollar, this move had already happened. So yeah, it was like a very clear setup if you ask me. Let's go to the 1 hour chart and let me show you what I mean by a cool, clean setup. We were trading inside of this bearish structure, right? And let me just duplicate this very structure. We were trading inside of this very structure, and right here it seems that after this low we made a higher low by just a few pips for a break above, and the actual setup was the break of these highs, which gave us a nice I know it's in hindsight, but I'm just giving you what would have been my actual trade at the break of these highs for a 17 no yeah let's say a 20 pip no an 18 a 20 pip stop loss and a first target of 90 pip. That's a better than 1 to 4 risk to reward scenario, and I missed it. There's nothing I can do actually about it, but to look for more opportunities in the market. And as you can see, there are tons of opportunities that yield every single day. You just have to be very, very attentive and know what you're doing, actually. And it's much better to trade within a community than it is to trade alone. Let me tell you that, because I taught myself how to trade. I'm a self-taught trader. Nobody taught me. And it can be really frustrating from time to time, just hearing your idea inside your head. It's so nice to have a fresh pair of eyes when you're feeling stuck, and that is exactly what we do with the premium community, guys. So if you want to join us and you want to try us out, just hit the link below this video for a very big discount on your first month. You're only going to pay $25. So pure mathematics, advanced planning. Can you please elaborate on that? And I'm pretty sure I can respond. Let's have a look at silver now. Silver also in a very bearish move, but has hit some very interesting levels, guys. Now, this is the previous highs in silver that once we broke to the upside were retested before this big move to the upside. Now, what interests me about this chart is actually this week. Boom, this one right here is a big rejection of that level, and of course that this is just big money picking up stops before moving higher. Momo traders got caught in this move to the upside. Just have a look at this. Bam. That's a stop hunt if you have ever seen one. So this is a big level in silver, and we have now rejected it again. But the thing about this rejection is that even though it seems to be very on a technical basis, I'm saying very reversally, in the sense that it really does look like buyers are coming in. Right now it has broken with what I would use as a trigger level to me. I would not be a buyer of silver at this moment, and the reason is pure seasonality and my bearish view on gold. You know that these two markets are pretty correlated. Not 100%, but I mean when it comes to big moves, they are pretty much correlated. So because of my view in gold, I will not be a buyer of this market. But what I'm definitely going to be doing is I'm going to be looking at the 1730 level, around the 1730 level. Let's see if it is in fact the 1730 level. Yeah, I will be looking at this level, and let's color it. I'm just coloring red. It's not a historic level, okay? I'm just coloring red. I will be looking at this actual level for a pullback, and I will be looking to short this. All right, let's have a look at gold. You are saying that it's beginning an uptrend. It might be. It might be. I mean, in the sense that if you look at this, I mean, it might be beginning an uptrend, but and I mean, and you can be absolutely right. You can be absolutely right. But the thing is that I follow my plan. And my plan is to be a buyer lower. So, I mean, it might be that buyers step in at these highs, right? It might be, it might be. We don't know. We can only plan for our trades. We can only plan for our actions. And it might be that you are right, that we are in the beginning of an up move that is going to break. And I would definitely miss that because my actual level was lower. But it is absolutely fine. I'm not here to tell you that I have all the answers. This is a community that we're talking about. So yeah, you can absolutely be right. But in the other hand, I'm looking at this level for an actual buy, the 1433, 1434, 1435. I'm sorry, and yeah, I mean that's my view on gold. But I mean, you can absolutely be right that gold is starting an up move. Okay, and the thing is that I mean, if you are right, and if yeah, give me knuckles too, bruh. If you are absolutely right, be careful with the 1477 level, okay? Because these are the previous lows, and that is going to be a very thick zone. There's going to be a lot of sellers right here, and there's going to be work to be done by buyers to swipe all those sales orders in order to push up. But I mean, I do like your idea, and you're probably right. I mean, not probably, but you can be right. Let's go and let's move forward. All right. Let's have a look at what can we have a look at. I think we've gone through everything that might be. Oh yeah, the U.S. dollar, Turkish lira, pretty nice. Pretty nice. Do not chase this, please. Do not chase this. I mean it. Don't chase it. But we did went short with my premium members on the US on this currency pair, and let me show you. All right. So here you go. We did went short this morning at the 75 level, so around these levels, and do not chase this trade, please. Because we already manage it. We are at a risk-free trade, and if this pulls back, it's going to hurt you a lot. But if you do want this kind of trades, guys, I mean, just join us. It's that simple. I mean, stop trading alone. I mean, there's a lot of good insight going on in the premium community, and yeah, I mean, you are more than welcome to join us. The link is below this video. But what are the targets here? Now let's talk about targeting for a while. Pretty beautiful move on the US dollar versus the Turkish lira. If you ask me, that's 1, 2, 3, 1, 2, 3 uh, setup. 1, 2, 3, 4. Setup. So what are we going to be doing is we're going to be targeting these lows. All right, that's pretty obvious that this is our first target on the US dollar versus Turkish lira. Not only because this is very important zones where buyers jumped in, but this is the lows of the structure and the calculated target for the shorts on the US dollar Turkish lira. Now, what we're going to be doing here is we are going to be taking profits on almost all of our trade, and we are going to continue to let this one ride. And let's have a look at this. Well, the actual setup that I saw on and the reason that I took this trade. So let me just change this to a thick white line. All right. So basically, this is why we shorted this bad boy, and this is the main reason we shorted it is because this is an actual retest of this trend line. If you want, if you really want to name it trend line, or well, the bullish structure because of higher highs, higher lows. So this is mainly our trade idea and why we are short the US dollar Turkish lira. I'm sorry guys, I have allergies. And we are targeting this level, the 560. Let me see, the 569 level. Ultimately, the 565. We are targeting the 569 and ultimately the 565. But there is room. There is room for a bigger move to the downside. And if you look at this, I mean, if we grab our Fibonacci tool and we calculate the targets of the last, I mean 161.8 of the last leg up, you can see that this is actually a very good zone to again to take profits. No, that's not it. This is the one. Okay, so if you ask me, this is another good zone to be taking profits in the sense that here we had a turning point in the market and a lot of retesting after breaking it down, and we haven't been this low since what, August? Since August this year, and well, there is good chance that we are at least going to be hitting our first targets. Do not chase this trade. This is not a trade recommendation whatsoever. This is me showing you what I do, and if you want to follow me on what I do, please join our premium services. The link is below this video, and you get a huge discount on your first month. Yeah, that's about it. Let's have a look at the British pound versus the Australian dollar. Again, this is a trade that I missed, and that's fine. I was not in front of my screens at the time it happened, and that's a beautiful, I mean, that's a 1, 2, 3. I was going to say the same again, but this is in fact a somewhat Orlando setup, and let me show you why. All right. So I'm going to change the template to a pattern within a pattern. Don't mind those names, guys. I mean, I have to. These are just. Yeah, that's right. These are just to change color. I have to rename them. And here it is, guys. I mean, just take a look at this nice breakout of the flag at the break of a key level. Now, why am I choosing this as a key level? And not these lows? Again, the 84.30 level was in fact a very important level to me on the British pound versus the Australian dollar. But the thing is that after these are daily charts, guys. These are daily charts, and yeah, and let me show you again what I'm talking about. So these are daily charts, and what I was looking is these levels right here. I know that you can barely look at them on the daily chart, but I'm not going to go to the 4-hour chart and scroll back. I mean, well, I'll do it. I'll do it. All right. So here is the actual level that I was looking at. Big time lows here. This level was being guarded by bulls very heavily. Then when we had this, I mean, this gap to the downside, this is the level that was retested and where big money just jumped in uh, short. And now we retested that level to the peak. And not only that, guys, if you look closely, this is a very obvious rejection. Okay, now we tested this to the peep, and we got that that breakout of the structure. Okay, I missed that trade, and well, that's fine, guys. I mean, completely and utterly fine. But I mean, I want you to know that trading can be and is supposed to be simple. All right. And this is what we do at our premium community. We look for this kind of setups every single day. Well, I think that I'm going to shut down the stream today. We did found a few very strong setups, and well, we have a good idea on what to do next. So I will be live tomorrow, about the same hour. And if you want to if you want to join me in my premium community, the link is below. You get a big 50% off on your first month. That's only $25, and after that, it's only $50 per month for this kind of input and added value to you every single day. Plus, you get access to me, all right, and my trade ideas. So, on to tomorrow, guys. Thank you for joining me, and have a great one.